Hello and welcome. This guide is brought to you by the experts at My Tax Accountant. Today, we're going to tackle something that causes a fair bit of confusion and, let's be honest, a bit of a headache for a lot of people in the UK, the K tax code. So let's jump straight in. Have you ever glanced at your payslip, seen that letter K next to your tax code, and your heart just sinks for a second? Well, if that's you, trust me, you are definitely not alone. But here's the good news. It's almost always a solvable issue. And we, the team here at My Tax Accountant, are going to break it all down for you, nice and simple. So here's what's on the cards. First, we're going to explain what a K code actually means and why you might have one. Then, we'll get into the nitty-gritty of how it hits your pay packet. After that, we'll give you a super clear 5-step action plan to get it sorted. And finally, we'll wrap up with a chat about your long-term tax health. Sound good? Let's get started. Okay, first things first. What in the world is a K code? The easiest way to get your head around it is to remember that it pretty much works backwards compared to a normal tax code. So, in simple terms, HMRC uses a K code when the value of things like your company benefits is actually more than your tax-free personal allowance. It's basically their method for making sure they can collect the tax you owe on those extra bits and pieces right from your pay. This really lays it out perfectly. Think of your standard tax code like 1257L as a discount. It reduces how much of your income gets taxed. A K code? It does the complete opposite. It's like adding another item to your shopping basket just before you pay. It adds to your taxable income to make sure every last penny of those benefits is accounted for.
And here's how you read the thing. It's actually super simple. The number in your K code tells your boss how much extra to add to your salary before they work out your tax. So, if you've got K243, just pop a 0 on the end. And there you have it. It means £2,430 is being added to your taxable income over the year.
All right, that leads us to the big one, the question you're probably asking. Okay, but why did I get one? Let's pull back the curtain on the most common reasons a K code might show up. It usually boils down to one of these 4 things. By far the most common is having valuable company benefits. Think a company car or private health insurance. It could also be that you're getting a pension while you're still working. Another big one is HMRC collecting tax you underpaid in a past year. And finally, having multiple jobs can sometimes trigger it. We're going to look at the 2 most common ones right now. Let's kick off with the number 1 reason, company benefits. And to make it really clear, let's invent a person. We'll call her Sarah. She's a manager working in London, and like a lot of people in her role, she gets some nice perks from her job. Okay, let's run the numbers for the 2025/26 tax year. The total value of Sarah's benefits, her car and health insurance, comes to £15,000. Now, the standard personal allowance is $12,570. See the problem? Her benefits are worth more than her allowance. So you just subtract one from the other, and you're left with £2,430. To collect the tax on that extra amount, HMRC gives her the code K243. It's as simple as that. Right. Another very common scenario is owing tax from a previous year. If HMRC figures out you've underpaid, they might use a K code to get it back from your wages bit by bit. Now, before you worry, think of it less like a penalty and more like a payment plan. It actually helps you spread the cost instead of having to find a lump sum. So, what does all this actually mean for your bank account at the end of the month? Let's talk about the real impact on your pay. And stay with me, because this part is absolutely crucial for understanding what you actually take home. Let's meet Maria, a basic rate taxpayer. She's on a salary of £22,000, but she has a K143 code. This adds £1,430 to what HMRC considers her taxable income. At the 20% tax rate, this works out to a total tax bill of £4,686. For Maria, that means about £24 less in her pocket each month. It might not sound like a fortune, but we all know that for anyone trying to stick to a budget, every pound counts. Now let's see how it plays out for a higher rate taxpayer. Here's Jack. He earns £55,000 and his company car gives him a K80 tax code. This adds a hefty £8,000 to his taxable income, pushing the total to £63,000. And this is the key bit. It shoves a big chunk of his earnings into the 40% tax bracket. His tax bill is over £15,000. That's an extra £3,200 a year in tax he wouldn't be paying otherwise. A much, much bigger hit.
But wait, here's a pro tip, and it's a really important piece of good news. There is a safety net built into the system. No matter how high your K code is, your employer is legally not allowed to take more than half, 50% of your pre-tax earnings in any single paycheck. It's called the overriding limit, and it's there to make sure you're always left with enough money to live on.
Okay, now that you know the what and the why, it's time to stop worrying and start doing. Let's walk through your 5-step action plan. This is how you take control and make sure that K code is 100% correct.
Right, let's do this. Step 1. Find your code. It's on your payslip, your P60 at the end of the tax year, or you can log into your personal tax account on the gov.uk website. Step 2. Check the details. Never just assume it's right. Ask HMRC for a breakdown of how they calculated it. Then get your P11D form from your employer, that's the one that lists your benefits, and see if the numbers match. Step 3. If it's wrong, contact HMRC. You've got to tell them. The number for the income tax helpline is 0300 200 3300. Get your national insurance number ready and give them a call. Step 4. Keep them updated. This one is so important. If your situation changes, you get a new car, you lose a benefit, tell HMRC straight away. They can't give you the right code if they have old info. And finally, step 5, check your payslip. Make sure the deductions look right and, crucially, that they aren't taking more than that 50% safety net we talked about.
And here's the bottom line from us at My Tax Accountant. An incorrect tax code is common but correctable. The key is to act promptly. Honestly, burying your head in the sand is the worst thing you can do. Taking action is what makes all the difference.
Okay, we're on the home stretch. Let's talk about long-term tax health. This is all about getting out of firefighting mode and becoming proactive so you can hopefully avoid these issues in the future.
So, how do you stay ahead of the game? A few tips. First, look at your benefits package every year. Does that company car still make sense, or would a cash allowance be better for you tax-wise? Second, think about tax-efficient savings. Bumping up your pension contributions is a brilliant way to lower your taxable income. Third, get familiar with HMRC's online tools. Your personal tax account is your best friend here. And lastly, I'm going to say it again because it's so important, always tell HMRC as soon as your circumstances change.
Which really leaves us with one final crucial question you need to ask yourself. Is your tax code working for you, or is it working against you? Now's the perfect time to find out.
If you've gone through all this and you're still feeling a bit lost, or you'd just rather an expert took a look, please don't hesitate to get in touch with the team here at My Tax Accountant. We're friendly, we know our stuff, and we're here to help. You can get us on WhatsApp or give us a call on 07854 255 375, or just send an email to info@mytaxaccountant.co.uk.
We really hope this guide has cleared things up for you. For more straightforward, simple tax advice just like this, please do subscribe to the My Tax Accountant YouTube channel. Thanks so much for watching.